What if a batsman in a game of cricket had the option to buy something that ensured, even if he got out without facing a ball, a pre-decided number of runs would still be added to his team's total? Wouldn't he take that opportunity at any cost? Of course he would, because he knows cricket is unpredictable, just like life. Now think of term insurance in the same way. If something were to happen to you unexpectedly, term insurance ensures that your family still receives a pre-decided sum of money, no matter what. A financial safety net that guarantees security when life throws an unexpected bouncer. Shouldn't you buy it at whatever cost? More importantly, shouldn't you buy it as soon as possible? Because just like a game of cricket, life and death are unpredictable. Yet, most people delay this critical financial decision. They assume they have time. They think they'll buy it later when they're older, when they have more responsibilities or when they earn more. But waiting doesn't just increase the cost. It can even make you ineligible later. Today, I'm going to reveal why delaying your term insurance purchase by even a few years could be one of the costliest financial mistakes you'll ever make. One of the most common questions I get asked is, what's the right age to buy term insurance? The answer is almost certainly earlier than you think. The longer you wait, the higher your premiums. And in some cases, you may not even qualify for coverage at all. In the next few minutes, I'll show you exactly why buying term insurance in your 20s or early 30s rather than waiting until your 40s could save you lakhs of rupees over your lifetime. You'll understand the hidden costs of waiting, the financial logic behind early purchase, and how to make the smartest decision for yourself and your family. Most people delay buying term insurance because they think they don't need it yet. They assume they'll buy it when they get married, have children, or when they reach a certain age. But what they don't realize is that waiting comes at a significant financial cost. Unlike most financial products, where waiting can sometimes be beneficial, term insurance works in the opposite way. The younger and healthier you are when you buy it, the lower your premiums will be, not just for the first year, but for the entire policy duration. Let's break this down with an example. If you purchase a Rs 1 crore term insurance policy at 25 years old, your annual premium might be around Rs 10,000. But if you wait until you're 35, that same coverage could cost Rs 18,000 to Rs 20,000 per year. By 45, it could go up to Rs 45,000 or more annually. That means over a 30-year policy term. Someone who buys at 25 could save Rs 35 lakhs compared to someone who buys at 35 or later. And that's just the direct cost of premiums. Now, think about what happens if you invest the difference between the lower and higher premiums over time. With compounding returns, the cost of delaying term insurance becomes even more staggering. The real financial loss isn't just the extra money you're paying in premiums. It's the money you could have invested and grown if you had locked in your lower rate earlier. People insure their cars, homes, and even their mobile phones without hesitation. But when it comes to insuring their own life, the one thing their family depends on most, they delay the decision. They assume nothing will happen to them anytime soon. But that's not how life works. Let's ask the tough questions. What happens to your family if something happens to you? Who will pay off the home loan? How will your children's education be funded? Will your spouse have financial security to maintain their lifestyle? These are not pleasant thoughts, but they are necessary considerations. Term insurance acts as a financial safety net that ensures your family is not burdened with debt, lost income, or an uncertain future. It guarantees that no matter what happens to you, your loved ones will be taken care of. The problem with delaying your decision is that you never know what life has planned. Health conditions like diabetes, hypertension, or heart disease can develop over time. If they do, you may face higher premiums or even be denied coverage altogether. Buying term insurance early locks in your eligibility at the lowest possible cost. The younger you are, the less likely you are to have medical complications, making it easier and cheaper to secure coverage. Think of it again in terms of cricket. Imagine if a batsman had the opportunity to buy something that ensured that, even if he got out without facing a ball, a pre-decided number of runs would still be added to his team's total. Wouldn't he grab that opportunity without hesitation? Of course, because he knows cricket is unpredictable. Just like life, term insurance works the same way. If something happens to you unexpectedly, your family will still have the financial security they need. The simple answer to when you should buy term insurance is, as soon as possible. There are key life events that make buying term insurance even more critical. The moment you start earning, getting married, having children, taking on major debts, or becoming responsible for aging parents. These are the times when your financial responsibilities increase. Term insurance ensures that your loved ones won't struggle financially in your absence. Even with all these benefits, many people still hesitate to buy term insurance. They tell themselves they are young and healthy, so they don't need it yet. They say they don't have dependents, so there's no point. They believe they can't afford term insurance right now, or they think their employer-provided coverage is enough. But none of these reasons hold up when you look at the numbers. Insurance isn't about predicting when you'll pass away. It's about ensuring that if the worst happens, your family is protected. The best time to buy is when you're young and healthy, because that's when it's cheapest. If you wait, your premiums will be higher. If you wait too long, you might not even qualify for coverage at all. Employer-provided life insurance is limited. It usually covers only 1-2 times your annual salary, which is far from sufficient. Plus, if you switch jobs or lose employment, your coverage disappears. Having your own term insurance policy ensures that your protection is never dependent on your job. If you postpone buying term insurance, you are making one of the biggest financial mistakes that could cost you and your family dearly. Every year you wait, you will pay significantly higher premiums in the future. You will risk losing eligibility if your health condition changes. You will miss out on financial security for your family when they need it most. You will regret not locking in lower rates when you had the chance. Think back to the cricket analogy we started with. A batsman would never pass up the opportunity to secure guaranteed runs for his team. So why would you pass up the chance to secure your family's financial future at the lowest possible cost? Unlike in cricket, this opportunity gets more expensive every single year you wait. Buying term insurance early isn't just a smart financial move. It's a lifeline for your loved ones and a permanent cost-saving decision. The best time to buy term insurance was yesterday. The second best time is today. Don't wait until it's too late. If you want expert guidance on choosing the right term insurance plan and making the best financial decisions for your family's security, I invite you to join my exclusive WhatsApp community. Inside, you'll get real-time insights, expert advice, and step-by-step guidance to make informed insurance decisions. The link